Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, markets start on the red note, but Infosys is the stock we have to really watch out for.
The longer-term earnings growth should be anywhere between 12 to 15%, and we have been growing below trend in the last few years.
Turned out to be a session where we're definitely sluggish both for the Nifty and the Sensex, but it is definitely a struggle for the mid-caps.
To buy here and keep a stop of about 10,950, 960 on banks, maybe 27,650 thereabouts. There is a good chance that there could be a recovery.
The Nifty did recover, and it did look, I mean, it's doing much better. I mean, it's down 30 points.
We're coming to the mid-cap. I don't know where to begin. It is such a deep sea of red. Starting off with, of course, the newsmaker of the morning, PC Jeweler, is finally going home with a cut of about 26% now that there's no buyback. We've had lots of selling on the MSO stocks once again. Den Networks down 16%. Hathway is lost in double digits as well.
Monday blues on Dalal Street. Nifty sees pressure at 11,000, slips 3/4 of a percentage point, while Sensex loses 200 points. Metal and Pharma are the weakest performers.
Mid-caps get battered in trading. Index tanks over 2.5%, sheds nearly 500 points, led by big losses in PC Jeweler and other mid-cap companies.
Dr. Reddy takes it on the chin, falls close to 10%. The US District Court granted a preliminary injunction against the sale of its generic drug to treat opioid addiction. This pulls other pharma companies lower as well.
FMCG giant Hindustan Unilever delivers on most counts with its first quarter performance. It's met expectations on profits, margins and volume growth, but it's missed revenue growth estimates.
Government is set to hike load carrying capacity of trucks and tractors starting tomorrow. The capacity might be increased by up to 25% with stricter overloading penalties. Ashok Leyland and Tata Motors slump in trade. Well, those were the top 5 headlines from what was a dreary day for the bulls on Dalal Street. Hello and welcome to Markets Today Talk Back, the show where we tell you about the 6 hours of today's trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant. I'm clearly wrongly attired.
Oh, and the green. But I mean, I guess some would say that, I mean, either the mid-caps had to pull the large caps lower, or large caps had to push the mid-caps higher. And I think the former turned out to be true, at least today. There is this huge difference between where the Nifty is, the mid-caps are, compared to their respective life highs. And, I mean, it started to converge by a little bit today. Well, we'll discuss all of that, our top stories in a bit. Joining us to answer the stock questions and other questions are Deepan Mehta on fundamentals, Ashwini Gujral on the charts. Gentlemen, thank you both for being with us here on the show. Before we start our Q&A session, as always, let's take a look at what really happened as far as markets are concerned. Lata, dominating drivers.
Yes, big sell-off and bewilderment, at least on my part. The global cues were weak, but they were not seriously bearish. Nothing prepared us for the big selling in the big caps and an even bigger selling in the mid caps. Metal stocks appear to have suffered because of the US-Russia talks, probably removing all sanctions on Rusal. I mean, Australia was also weak, but I mean, even steel stocks were taking it on the chin. It was not just aluminum stocks. And then, of course, there were specific pain points in Dr. Reddy's because one of its drugs, Suboxone, will not bring at least $75 million of earnings. That was penciled in. ICICI was in pain because of probably another probe. So specific bad news in all of them, and in the mid-caps, again, specific bad news. DCB numbers not very happy. PC Jewelers pull back its buyback offer. So on and so forth. You know, it looks like many bad micro stories, but there was no taking away from the fact that some bull or some bulls were liquidating. What's your sense stock-wise?
I mean, so let me dive straight into, because everything was lower, let me dive straight into stocks, large caps, and Tata Steel, Tata Motors, the entire pharma pack, Lupin, Dr. Reddy's, Aurobindo, Sun Pharma, everything, complete washout actually. I mean, if you look at the pharma stocks in specific. Well, there were some pockets of green, mostly limited to IT. Tech Mahindra, you had Infosys and Wipro, which sort of were marginal gainers. Tech Mahindra was up 2.5. Broader sell-off, I mean, stocks like PC Jewelers now is down 80% this year. It's about 85, 88 or so. Nagarjuna Construction Company, Reliance Capital, look at the sell-off in Jet Airways. And I'm, by the way, not going by the biggest losers, but a combination of the largest losers accompanied by the highest volumes. So look at Jet Airways, DCB Bank, Jayaprakash Associates was down 9%, I think, by close. IRB, Raymond, Jain Irrigation, India Cements, Dish TV, Tata Communications, really a long list of losers in the broader market. And of course, large caps looking very weak as well. Lata.
Yeah, lately when we don't get explanations, people tell us weak PMS hands went to stronger PMS hands, and now people are saying money is going from PMS guys to mutual funds. So a lot of portfolio managers are selling because their clients are liquidating. In any case, let's first find out what the charts are telling us. Ashwini and Deepan are here with us. Ashwini, first to you, your thoughts on the big crack we saw in large caps today.
See, basically today, like I was saying, that we could not even cross 11,000 and the market was betraying weakness. Now, what's likely is that 11,050 for the near term is your upside resistance. We have turned sharply from there. And my sense is the breakout which happened from 10,850, 900, that possibly has failed. And we could get into the lower end of that range, maybe 10,550, 600. And that was the expectation, that you cannot cross, you know, all-time high with an impending election. So my sense is that people should have carried home short positions, and for the foreseeable future, short positions are likely to work out much better than long positions.
Okay, short positions broadly as a mental makeup, Ashwini is saying, may work out a lot better than long positions, at least for the time being. Here's the second headline of the day. Then the mid-cap index took a severe beating in trade today. The index tanked over 2.5%, led by big losses in stocks like PC Jewelers. The stock saw a massive 25% cut after the company withdrew its buyback plan of about 424 crore rupees. Other mid-cap losers included Reliance Capital and Future Consumer. We've got questions.
Oh, yes. This question comes from Devesh Ambadkar. Is he with us already?
No, I think let's just get let me put this question in a broad way to Ashwini. Ashwini, mid caps and small caps, I mean, the fall continues in a very sharp way. No real halt. What's your sense here?
See, the problem is that, you know, people do not understand why a certain rally happened. And, you know, in a bull market, we tend to think, you know, it's fundamentals and, you know, it's great insight, etc. Last year's rally was cost of capital. Now that cost of capital is going up. Hence, these are crashing like anything. Why? Because there are no buyers. So, you know, the air gets out 3 times as fast as it comes in. So right now, no point looking at, you know, X is better than Y and Y is better than Z. Everything is painted by the same brush. Let this, you know, collapse continue, and, you know, possibly closer to say 10,500, 600. You know, you could again look at it. But for the moment, the momentum has increased, and this sort of momentum, I think you could have another 3 or 4 days where a lot of carnage happens.
Okay. Well, brace yourself and fasten your seat belts. Well, we have this viewer who has a question, Devesh Ambadkar. He has written to us with a question on PC Jewelers, wants to buy 50 shares of the company for the longer term and wants to know the right time to enter the market. Well, Deepan, as Prashant was just saying, we saw the stock fall, you know, almost 100% year to date. What's your sense at double digits? Is it a buy at all?
See, for one, we don't really track PC Jewelers that closely, considering that there are so many controversies surrounding the stock, and it's a highly volatile company and a lot of news flow does happen, and to an extent I think a lot of speculative activity also has been noticed in the counter. So if the investor really is a long-term investor, then he should consider something like a Titan, which is in the same space, but, you know, far better corporate governance standards, good visibility as far as earnings are concerned. And although you may expect a soft June quarter, but the long-term trajectory is great with gradual expansion of the retail network and further productivity improvements and overall premiumization drive which the company is undertaking. So PC Jewelers is not for the long-term investor, it's more for the traders or the speculator. If you're an investor, then you might as well stick to quality and go for the best in the industry, which is Titan.
Okay. Well, fallen from 550 or 560 to 89 just year to date.
Very, very severe beating there. The third headline then, the Pharma index dragged the most in trade in terms of sectoral indices. This is Dr. Reddy's fell close to 10% in a big setback for the company. It's back to 2100 levels. So, a US District Court has granted a preliminary injunction against the sale of the generic Suboxone. This pulled other pharma companies lower as well. The likes of Sun, Lupin, Cadila and Aurobindo all fell close to 5%. In fact, let's dive in into the details as far as DRL and other stocks are concerned. Ekta is standing by with exactly that. Ekta, over to you.
Well, yes, definitely negative news which came in for Dr. Reddy's, because as per the US court, Dr. Reddy's cannot sell Suboxone unless they solve a pending patent litigation that they do have with the innovator of Suboxone generic, which is basically Indivior. Remember, Suboxone is an anti-drug addiction drug that Dr. Reddy's had received approval for from the US FDA, but had a pending litigation on and hence launched it in the US markets at risk. Now that this particular patent litigation is still not resolved, Dr. Reddy's will not be able to sell this particular drug in the US market till there is some resolution to that. That means it's an opportunity loss for Dr. Reddy's. They could have potentially made up to $75 to $80 million from that particular drug in 1 year, with a possible EPS addition of up to around 50 to 60 odd rupees, and hence that opportunity loss is what the street is possibly factoring in.
Okay, so there you have Dr. Reddy's could have lost $75 million of sales. And I don't know, not everyone said 50, 60 rupees. Some people said probably they have lost 30 rupees by way of EPS. Nevertheless, let's get someone who has a question on the stock. Joseph K. from Kerala has written to us. And he says he has 100 shares of Dr. Reddy's, which he has purchased at 2,900 rupees. And says he's long-term, wants to know if he should hold or sell. Deepan, what would you advise him?
That's a difficult one, you know, looking at such a huge paper loss is always a very difficult decision for the investor to sell. So although I'm not that gung-ho about the prospects of the pharma industry and Dr. Reddy in particular, but there's no doubt the stock has corrected in recent times quite significantly. And I would say that it's better to just hold on for the time being and look for a trading bounce to exit out of Dr. Reddy's. Maybe it could come around the time the earnings are released, or if there's some positive news flow on account of any new drug which they may have been launched, or any legal verdicts coming in their favor. So I would just say sit tight for a few more weeks or months, but at an opportune time one should certainly look at exiting out of Dr. Reddy's, at least when the paper loss or the notional loss is narrower. I think that decision also becomes slightly easier. And as I said, I think, you know, it's becoming a far complicated industry than before, and just too many variables coming into play, and it's no longer a nice secular growth story that pharma was a few years ago. So I would tread into pharma with extreme caution, not just for Dr. Reddy, but for almost all pharma companies.
Okay, well, let's get a chart view also then, Deepan. Ashwini, your view on Dr. Reddy's?
See, since I'm not a doctor and, you know, I don't really care whether I'm buying pharma or FMCG or this or that. Overall, as an investor stroke trader, why should I put my money into things where, you know, every second day there's a problem and a stock falls 10%, and, you know, FDA, no FDA, I don't care. But, you know, this sort of volatility is not good for an investor. Why shouldn't I buy Bajaj Finance or HUL or 100 other stocks which are not so volatile? Pharma companies are doing something wrong, and with this sort of, you know, performance, investors should not touch these pharma companies. All
right, so that's a convergence of views to help Mr. Joseph, both of them saying avoid. or at least sell on a bounce. We will, well, before we go into a break, we've noted that metal stocks were also under the weather today. Tata Steel losing 7%, and other stocks like SAIL, JSPL also losing, you know, over 5% apiece. Manisha is here to give us an idea of the global metal scene. Manisha, tell us, big selling?
Oh, well, yes, across the board, whether it's in Shanghai or LME as we are trading right now, we have seen a complete sell-off come in for the base metal prices. The major event today, of course, is going to be the US and the Russian president sitting together and having a conversation. And the expectations are that you might be looking at lifting or easing of sanctions on Rusal, and that would bring aluminum and other metals back into the market. In any case, we have seen a sell-off in the metal space because of the US-China trade wars. The supplies have been increasing. The Chinese data, whether it was GDP today or the trade numbers on Friday, have not been so positive. So the metal has been under pressure, and with more supplies now coming into the market, we have seen that pressure actually intensify in the day today.
Well, the large caps corrected in a pretty brutal way, following what mid caps and small caps have been doing for the last couple of days. We've been taking your questions. We got through 3 of the 5 headlines that we put out every day. Here's the 4th one. FMCG giant HUL met expectations with its first quarter performance. The company reported in-line numbers for net profits, margins and volume growth. However, it missed the revenue growth estimates. Mangalam Malu is now joining in with the most important points which the markets will take note of from HUL. Mangalam, over to you.
Well, no complaints as far as HUL's first quarter numbers are something to go by, because revenue growth of close to 11.2%, one may say it is a tad bit below what the street was expecting, around 13.5%. But when you're growing on that base, it is something that, you know, the street will try to overlook, primarily because comparable revenue growth was 16%. Add to that, the gross margins did expand by about 200 basis points year on year. We had the EBITDA that the company posted at 2,251 crores. This compares with our poll of 2,200 crores. So there is a beat out there as well. And the net profit absolutely in line with our expectations. 1,529 crores is what the company posted. As far as volume growth is concerned, the 3rd consecutive quarter that the company has posted volume growth in double digits. So 12% this time, coming on a favorable base. The most important thing is that the management commentary was a little circumspect as far as input costs are concerned. So that is something they will be watching out for. So let's see whether there would be price-led growth come by in the future or not. And secondly, as far as rural demand is concerned, they said yes, it has improved year on year, but they would like to wait for a few more quarters to call this a structural improvement. HUL, remember, is at a record high as we speak, trading at 51 times FY20 earnings. The earnings call will be underway. Post that, we will see what the brokerages are saying about this company and what kind of EPS upgrades are they giving to Hindustan Unilever, basis which the stock is likely to react. But as of now, no complaints.
Okay, thank you very much for that, Mangalam. No complaints with HUL, and volume certainly surprising on the upside, if not other parameters. Tapan Das from Kolkata has written to us with a question on Hindustan Unilever. Says he's a long-term investor. He wants to buy 250 shares of the company, wants to know the right time to enter. Well, Deepan, that's a tough one. He wants to buy a lot. What's a good time right now?
You know, I think spotless results coming in from HUL, but when you look at the price to earnings multiple at about 70 times trailing 12 months, that is quite daunting even for HUL, and the P multiple is on the higher side. So I think that if the investor has made up his mind and wants to buy HUL, then this is as good a time as any other. But I think that there are far better ideas within the FMCG space, and we have been positive on Indian FMCG companies, the likes of, say, Godrej Consumer or Jyoti Laboratories or Imami for that matter. Could be even a Britannia, I think, where growth rates are far higher and P multiples, although on the higher side, you know, at least they are slightly lower on a price to earnings growth as compared to HUL. So my advice would be that, you know, HUL is a moving train and it's already left its station. It's already rallied significantly over the past 5-6 months or so. I think it's time that better money would be made, higher returns would be generated from other FMCG stocks. But one observation that HUL numbers brings very good tidings for the entire FMCG industry, and it's a lead indicator for what to expect from the other FMCG companies. So there could be a trading bounce in other FMCG companies, especially mid-cap, small-cap companies, which have so far been laggards as compared to HUL.
All right. Thank you very much for that, Deepan. Yep. in 2006-07, the stock was trading in 2 digits as well. Of course, even a year ago, it was trading at half the price. Well, the last headline for the day, the government is all set to increase the load carrying capacity of trucks and tractors from tomorrow. Sources tell CNBC TV18 that the capacity will be increased by up to 25% with stricter overloading penalties. The government is citing improvement in road quality as one of the reasons for this move. And while this hike in load limits for trucks augurs well for fleet operators, it could lead to demand destruction for new vehicles. Sonia Shenoy is with us. Sonia, the possible impact?
Well, just to explain it very in simple terms, this could mean a negative for many of the commercial vehicle makers. It could result in lower truck demand. Now, what this means is a truck that was carrying about 25 tons can now carry 28.5 tons, which means that you don't have to buy additional trucks if you want to increase your tonnage. This, of course, means effective utilization. So the Transporters Association will be very happy when this comes through. It's going to be notified tomorrow. But for CV makers itself, it's going to be a negative. Crystal has written a report recently. Remember, only the notification is tomorrow. This rule was in the works for a while now, and Crystal came out with a detailed report on what the impact of this would be on the sector as a whole. They say that fleet utilization would fall and it would immediately impact commercial vehicle sales. There will be an increase in the supply capacity on trunk routes, and that would lead to a reduction in fleet utilization. Large fleet operators would need fewer trucks to carry the same amount of load. And, what this would...
No, Sonia, just a minute. The incoming news is that this is going to be applied prospectively. So older vehicles will have to take permission from the government and the new rules are only going to apply prospectively. So it is quite possible that newer demand will come for exactly the value-added trucks that perhaps Ashok Leyland is now increasing its capacity for. So I think let's do one thing. We'll try and get to the Ashok Leyland management and to our experts. Of course, Deepan is with us. Deepan, my own question to you is exactly this. They've increased the load carrying capacity for vehicles, but they also said that this rule applies prospectively and existing vehicles will have to get an approval from the government. I'll also add this SMS question we got on Ashok Leyland. There is a Rahul Kumar who has written asking us that he has 1,000 shares of the company and he had bought them at 120 rupees. He has been obviously holding it for 6 months. He wants to know what he should do. So if you could answer both of us.
So I think the long-term prospects of commercial vehicle manufacturers, especially the likes of Ashok Leyland, which have made huge strides in terms of productivity, new models, distribution, exports, and entry into defense, still remains pretty much intact. I think these are minor headwinds. Eventually, they do get settled down, and it may affect demand for a few months or so. But in the longer term, I think if the economy starts doing well and the benefits of GST start to flow through, then there is an increased demand for commercial vehicles. Do keep in mind that there's a lot of scope for improving the modernization of the fleets, which has been neglected for so many years because of poor economic trends and poor transportation requirement. So I'm not that concerned about this particular new notification, and as you said, it may have a beneficial effect for existing CV manufacturers. But I think the underlying trends for the entire commercial vehicle industry remain pretty much strong. And investors can certainly look at least remaining invested in CV stocks, or maybe looking at adding to their holdings on such correction days where some minor bad news has come.
Okay. Thank you very much for that, Deepan. We will have to still parse this news that we are getting that more load can be carried, but the rule will apply to newer vehicles. How does that change the math for the companies? We will be speaking to truck makers in a bit, and for the moment, of course, the market has taken that news very badly. Thank you very much, Deepan and Ashwini,